It seems to me as though we're entering into a new chapter of this elevated and elongated period of heightened economic and policy uncertainty. But there's something that we really have to get to the core at, which is that tariffs and totally rebalancing and reshaping global trade for President Trump is like a religion. I mean, we can all talk about the art of the deal and that maybe all of these aggressive tariff threats are just a ruse to get deals. We hear about deals, we haven't seen any yet, and time is more or less running out before this starts to truly impair President Trump's credibility. But just remember that Donald Trump went on this tariff and trade crusade vocally and emphatically back in 1987, and he didn't let up when he was a private citizen, and he hasn't let up in both of his terms as president. He has stated on record many times that tariff is his favorite word in the dictionary. And what I go back to, because you mentioned Liberation Day, to which I have been saying, liberate us from what? Our sanity? And you think about why were there reciprocal tariffs with crazy numbers in all these various countries? It's because of what this additional levy on top of the 10% baseline tariff, what they implied. Each one of those numbers was really a quotient. It was a given country's trade surplus with the United States divided by their export base. And that was the reciprocal tariff. And the hidden message behind that was that is the number, country by country, that would totally eradicate, totally eliminate that bilateral surplus that country A, B, C, and D were running against the United States. So you have to dig through, notwithstanding the roller coaster ride we've been on, and the threats, and then the reprieves, and then the alleged deals, that this is really the mindset of the president and his super protectionist team, which is that it wants, in the end, as its ultimate goal, the complete evaporation of trade surpluses from the rest of the world on the United States. That's the one thing we have to take out of this, is that is the ultimate goal. Everything that we've been seeing, and I know that we're all focused on this minute by minute, hour by hour, day by day. It's been an incredible headline-driven market, but we have to understand, what the end game is, because what this is telling me is that the administration doesn't seem to fully comprehend how the balance of payments works, and that really troubles me, because the balance of payments by definition have to balance. So the United States does run a trade deficit with the rest of the world, but it runs an equivalent capital account surplus with the rest of the world. So what happens is that these accumulated trade deficits, primarily on the product side, are met with, they coincide with, an equivalent inflow of capital into the United States, because the balance of payments have to balance. Now, it's an academic debate as to what drives what. Does the current account drive the capital account? Does the capital account drive the current account? But the balance of payments have to balance. And it's totally normal and apropos that the world's reserve currency traditionally does run trade deficits with the rest of the world. It makes perfect sense that the richest and the most powerful country in the world runs trade deficits with the rest of the world. That is just common sense. But the view in Washington is that this is just stealing jobs and investment from the United States to its trading partners. But it just comes down to Sir Isaac Newton's, famous third law of motion about every action has an equal and opposite reaction. The United States benefits from these trade deficits by the capital account surplus, because what these accumulated capital account surpluses, what it's meant is that not only do foreign investors help fund the U.S. fiscal deficit because they own about $9 trillion of Treasury securities, but they also help fund the debt market for the corporate sector, because it's not usually discussed, but should be, that the foreigner also owns about $5 trillion worth of U.S. corporate bonds. And then the big mama is the equity market. And everybody always talks about the foreign buyer strike on U.S. treasuries, but the foreign investor owns twice as many U.S. equities as they own Treasury securities. They own almost $20 trillion of U.S. equities, which of course helps fund corporate America. So that's the net benefit. You see, you can always just focus on one side of the balance sheet and say we're a loser because we're running trade deficits, and that means these jobs in manufacturing are being created somewhere else. But The offsetting benefit is that the United States, by virtue of these capital inflows, consistently have a lower cost of capital that would otherwise be the case, both the debt and equity cost of capital, and a higher rate of return on assets. And that, therefore, creates the tremendous increase in wealth that the United States enjoys that's not comparable in any other country. Of course, it's a vicious circle because that wealth creation generates an impact on confidence in spending, and there is a 95% correlation between consumer spending and imports. And so that's why the United States has just about the lowest personal savings rate in the world, and at around 70% it has just about the highest consumption to GDP ratio in the world. So how do you not run trade deficits with the rest of the world when their savings rates are higher, their consumption ratios are lower, the rest of the world lives more frugally, but the rest of the world also has much lower wealth accumulation? So there's a symbiotic relationship between the current account and the capital account. And my concern all along has been that the White House just focuses on the trade deficit without realizing that the trade deficits have coincided with years of accumulated capital inflow that has made America wealthier. I think the problem in the United States is how that wealth and that income has been distributed. It is not the fault of the foreign investor. It is not the fault of the foreign producer that to this day, whether you have Democrats in power or Republicans in power, these gaping wealth and income inequalities. All we've had is a situation where fiscal and regulatory policy has benefited the upper end of society in the United States. And that's why the lower end has continued to lag to this very day, which
states. And that's why the lower tier has continued to trail to this very day, which generates its own social issues. So you can direct the blame at America's financial troubles and fault it on the rest of the globe. But the issue to this day, and included in this big, impressive legislation, does not confront what I think remains one of the essential limitations on the U.S. economy and on its society, which are these nearly unmatched income and wealth disparities. That's truly the matter here. And the difficulty with tariffs is that a tariff is essentially not much different than a consumption tax. Now, you can debate how much gets transmitted through. How much does the domestic buyer pay the duty? Then how much does the distributor pay the duty? Then how much does the retailer pay the duty? And then what eventually gets shifted onto the customer? But it is reckless to assume that none of it gets transferred onto the customer in the form of steeper costs. That is just absurd. But again, it disturbs me when I see out of the White House that there's not going to be any inflationary effect whatsoever. There is. And the dilemma is that wages are not going to match because the labor market is easing. So this is going to crush real employment-based income for the most fragile segments of society in the workforce, who will not have the negotiating strength this time around to recover what is going to be a price shock. Whether it's large or small, there's going to be a cost effect that's going to damage real pay. And once more, who's going to be abandoned is going to be the common worker. And so this is going to breed more, I think, bitterness and disruption, particularly from a societal setting from what's happening now on the trade front. Everybody says that, well, middle America got scorched by all these open trade agreements, and it got scorched by globalization. No, I am not ready to toss the works of Adam Smith and David Ricardo and the theory of comparative benefit into the garbage bin. I'm not going to be doing that, and nobody ought to. The challenge in America is how government officials have opted to disregard how to allocate the gains of globalization. It's just been allowed to further expand these income and wealth gaps. And that is, in my view, a top 3 concern in the United States today. And sadly, it's not getting much focus. Well, I'm not saying anything must occur. What I'm saying is that we are on an unworkable course. If you take a look and we get the quarterly data from the Bureau of Labor Statistics, you're going to see that beginning about 40 years ago, the labor share of earnings was at a very elevated level. And that was back in the, leave it to Belabor era, where there was steadiness in society. For the past 4 to 5 decades, that figure has only been sliding and is at an all-time low. I'm referring to the labor share of earnings. It's at a historic low. Nobody mentions this, but still, productivity is at a peak high. So you have a condition where normally the working class should be reaping the gains of efficiency, but they're not. Their share of earnings is sinking. If you're taking a look, for instance, at real weekly wages out of the monthly non-farm report, it hasn't moved in the last 5 years. But as you noted, profits have done excellently. And look, I'm a capitalist, but capitalism and democracy are always dancing a fragile dance, and you do want to safeguard democracy. Capitalism requires democracy. And so, yeah, I'm somewhat concerned about what I'm observing because there is no initiative either in budget policy or in trade policy. There's truly no endeavor here, nor has there been for numerous decades, to make sure that the income pie is being shared in a more balanced way. That's the missing element in these tariffs. It's going to lift prices not on leisure services, which a lot of low-income buyers can't even purchase anyway, but it's going to hike the cost of a wide range of daily necessities which people require. And the lower tier of the wage bracket spend nearly 100% of their income on these. They're going to get pressured severely. So, I just believe that this tariff and trade conflict is a massive blunder. It has an enormous amount of political backing behind it, but it is a huge policy error and will have principles of unintended outcomes that people aren't discussing today. I shouldn't state that because I'm discussing in my daily, but this will not conclude well.
Don't forget to like our video and subscribe to our channel. Your comments are very valuable to us. Please make a small comment.